Good evening, everyone. It's Sherry Donnelly again. I'm not sure that you can tell, but behind me there is a big mess in my house. That's because on Saturday I'm moving. So my next broadcast will be from a new accommodations. So hopefully it'll be a little bit less messy than this the next time you see me. So tonight we're going to talk about partnerships and what are the advantages and disadvantages of starting a partnership versus sole proprietorship or a company. So I'm just going to go and share my screen, and then I'll bring up the slide presentation. Okay, so starting a partnership. There's essentially three different kinds of types of businesses that you can start, and one is a sole proprietorship, another one is a partnership, and the third one is a limited company. Today we're going to talk about partnerships and how they work. So this is, again, a very simple form of business structure. However, you can have more than one owner and more than one decision maker. And all the owners and decision makers share the profits and losses. So you're mitigating your risk and the risk among one or two or more people. Okay. Again, there's no separation between business and personal. Any of the income that you earn through a partnership will be filed with your personal taxes. So it's still, it's not like having a company. And it's also very easy to start. If a business has a name other than your own, you have to register the name. Now, a partnership is not taxed as a separate entity. What happens is the partnership costs are accumulated as one entity, and then each of the partners will take their share of that to record in their personal income tax report. You still have to pay CPP on your business revenue, but it will be on your share of the revenue, not on the total partnership revenue as a whole. Again, you might have to pay tax installments depending on how much income tax that you owe the government. They will decide that and let you know when you file your income tax. You also have to include financial statements, the financial statements of the entire partnership with your tax return. So the advantages of having a partnership: you can run the business out of your home. You can claim your home expenses for a home office. You can use losses from the business to reduce other taxable income. It's easy to set up. If you're small enough, you don't have to collect the GST. So if you're making less than $30,000 in a year, you don't have to collect GST. However, the liability is shared. So your partners share in the liability for the business. The disadvantages is the partners assume all the liability and losses. So if you have one other partner, it's joint or severally that you are liable for the losses. So you're not just liable for your share of the losses or liabilities, you're liable for all of the losses. You're taxed at personal tax rates rather than corporate tax rates. So the more money you earn, the higher the taxes that you pay. And the business ends when any one of the owner dies. So it's not, the business can't be continued or passed down to family members or to other people. Okay, just a note on GST. If you have revenue over $30,000 in a year, you have to charge GST, and you have to apply for a GST HST account on the CRA website. I did a video previously on how to do that, so you can go and look at one of the previous videos and get an idea how to set up a GST account. Okay, that's all for today. Just wanted to let you know that if you go to my website, and that's on the bottom right-hand corner of the screen, www.sherrydonnelly.com, you will be able to see all of the previous videos. I think we're up to 8 or 9 by now on different aspects of accounting, and particularly taxes. So go ahead and check those out. We'd love to see that you're looking at them. And I will be back next week broadcasting from a new home, and I will see you then. Oh, where am I? Oh, here I am. Okay, so thanks everybody for tuning in and taking a look at my videos. I look forward to doing this again next week, and I will, like I said, be broadcasting from a new place that's going to look a little bit neater than this one does. All right, bye-bye.